All right. Hi, everyone, and welcome back to the Blockchain Professionals community. And we are happy to come back with our regular series of brown bag sessions, of webinars, of podcasts. And today we will be here speaking about the topic of stablecoins, which should have happened during the Blockchain Community Day conference back in June. But still, we had to reschedule this session, and we are happy that this event is happening in any way. And I'm very happy to invite our today's guest, Mr. Murtaza Merchant. Hello, we can see you on the screen.
Thank you, Alec. Yeah.
Yeah, thank you so much for bringing this amazing topic, which sounds like how stablecoins are rewiring payments and challenging traditional banking. Very provocative, I would say, and very interesting anyway, since we are hearing news about stablecoins almost every day. Something happens, and this industry is very actively changing and evolving these days. And before we start, I just would like to make a couple of words about the format. So this will be a webinar-like event. So I'll be bringing up the presentation soon. But still, all the questions coming from the live chats, wherever you guys are watching this video, be it on X, be it on YouTube, be it on LinkedIn, or be it on Telegram, or be it on the wearecommunity.io platform. Just leave your questions in the live chats, so wherever you're watching this, and we will be coming back with our responses in text, probably in 1-2 days after the event ends. So we will be waiting for your questions. And before we start, Murtaza, could you please just say a couple of words about yourself? And after that, we will be kicking it off.
Absolutely. Thank you, Alec. Good afternoon, everybody. Uh, just to give a brief about myself. I am working with Yellow Media. I'm a blockchain analyst. I'm an editor at Blockchain. So covering blockchain technology. Deciphering. What happens in the space all the time. And in the past as well, I've had quite some experience for the last 8-10 years, I believe. I've been working with different media outlets. On-chain analysis is something that I do, and we try our best to make sure that our readers and the audience that we cater to understand what's really happening in the crypto, Web3, and the blockchain space. And today I'm here to talk about stablecoins. Stablecoins today is one of the main uses or the use case of crypto. Now, I want to start this session, to be honest, by talking about something that's happened just last month. As Alec mentioned, uh, our session got delayed, postponed for some time, but what I want to share with you guys remains as pertinent as ever. Just last month, the Wall Street Journal reported that the top banks like J.P. Morgan, Citigroup, Bank of America, and even Wells Fargo, they're building a shared blockchain. Now, together, these four largest banks in the U.S. pooling their resources to launch a single tokenized deposit network through the clearinghouse. With the target of the first half of 2027. Now, they are not just doing this to experiment, because the reporting is blunt about the motive. They're doing it to stop deposits from walking out of the banking system and into stable coins. So you can understand this importance. So here is where I want to begin. When the biggest banks on earth, start building the exact technology they spent years dismissing, the question of whether stablecoins matter or not is settled, isn't it? The banks have answered it for us. For the next 20 minutes or so, I want to show you how we got here. How a tool that started life as a way to park cash, between crypto trades, became a payments rail, moving trillions of dollars. And that was the most powerful institutions, in finance moving to defend their turf. In part one of my presentation, let's deal with the sizes first, because the numbers are the argument. As of late May, the total value of stable coins in circulations crossed $320 billion. That's a record high. Now, put that in perspective, that figure is now larger than the foreign exchange reserves of 95 countries. And these are not small countries. That list includes the UK, and it includes Canada and also the UAE. Now, a category of privately issued digital dollars now holds more dollar value than the official reserves of most nations on the planet. Can you imagine that? And this market is concentrated. Two issuers dominate. Now, Tether's USDT sits at around $190 billion, and Circle's USDC at around 78 billion. Now, together, they are about 85% of the entire market, according to Reuters reporting earlier this year. Now, the more striking number is the movement, not the size. Over the past year, stablecoins settled somewhere in the region of $28 trillion in total transfers. I want to be honest about that figure, because a large share of it is trading activity and on-chain settlement rather than someone paying their supplier. But even when you strip that out, the real economy slice is growing fast, and the direction of travel is unmistakable. Here is, the simplest way to think about it. Stablecoins began as plumbing for the crypto markets. In 2026, they become the plumbing for money itself. In part two of my presentation, next slide, Ali, please. Let me get specific about the payment space, because this is where the rubber meets the road. Think about how a cross-border payment works today. You send money through correspondent banking. It hops through a chain of intermediary banks. It takes about 3 to 5 business days to settle. And when you add up the wire fees, foreign exchange markups, and the cuts taken by each bank in the chain, the all-in cost lands somewhere between 2 and 7%. That's high, isn't it? Now, for remittances into the sub-Saharan Africa, the World Bank puts the average at over 6%. Think about who pays that. It is a worker sending money home to the family, losing £6 in every 100 to a system designed decades ago. Now compare that to a stablecoin transfer. Settlement in around 60 seconds, available 24 hours a day, 7 days a week, including weekends and bank holidays. And according to BVNK Stablecoin Utility Report this year, which surveyed around 4,600 users across 15 countries, stablecoin transfers come in an average about 40% cheaper than traditional remittance channels. Now, businesses have noticed this. Cross border business to business payments in stablecoins went from over $100 million a month in early 2023 to over $6 billion a month by the middle of last year. Now, that is a 60-fold increase in 30 months. Now, in Latin America,
I'm sorry, Murtuza. Sorry to interrupt you. Can we just turn off the notification sound because it's disturbing
I
sometimes,
will, I
if that's
will, I will.
possible? Yeah, thanks.
Yes. Okay. There you go. Okay. And as I was saying, in Latin America, a Fireblocks survey found that 71% of firms are already using stable coins for cross-border payments. In Brazil, the largest crypto market in the region, over 90% of crypto inflows are now moving through stablecoins. And the legacy payment giants are not sitting this out. Visa's stablecoin settlement reached a $4.5 billion annualized run rate, okay, as of January. And Visa is now settling USDT directly with partner banks. MasterCard has built its multi token network to settle in a whole basket of stablecoins. Now, when Visa and MasterCard start clearing transactions in stablecoins, this has left the realm of crypto enthusiasts. This is the payments industry rebuilding its own rails. Now we get to the heart of it. Faster, cheaper payments are interesting. But payments alone do not threaten a bank, do they? Let me explain, the part that does. A bank works by taking your deposits and lending them out. Your current account balance is what the bank uses to extend credit to businesses, to mortgages, to the wider economy. Now, deposits are the raw material of banking. Now, imagine a stable coin, okay, that pays you a yield, a digital dollar that moves instantly, costs almost nothing to send, and pays you interest on top. Why would you leave your money sitting in a current account earning nothing? That is the fear. The banking industry has a name for it. They call it a deposit flight. And American banking trade groups have been explicit. In a submission this May, they want, in their words, that yield bearing stablecoins can destroy deposits. Now, here is the regulatory twist. The Genius Act, the US stablecoin law signed in July of this year, actually bans stablecoin issuers from paying interest to holders. So, in theory, the threat is contained. But there is a second piece of legislation moving through Congress, the Clarity Act, which we all are hearing about today, which the banks fear could open a back door to yield through regulated products. Now, that is why just a few days back, you had a very public spat between Jamie Dimon of JP Morgan and Brian Armstrong of Coinbase over what exactly is this question. This is not a technical debate. This is a fight over the foundations of how banks fund themselves. Now let me show you a second way stablecoins challenge banking, and this is one of my favorites because most people miss it. Look at who is issuing these things. Tether reported over $10 billion in profit last year. Let me say that again. A stablecoin issuer, $10 billion in profits, and with a team of what? Barely 15, 20 people. Anyway, how does it make that money? It holds the cash backing USDT in US government bonds and it keeps the interest. Tether now holds around $140 billion in US Treasury exposure. That makes it one of the top 20 holders of American government debt. It's one of the top 20 holders in the world. Can you imagine that? It holds more US treasuries than South Korea. It is approaching the holdings of Germany, a company that most people on the high street have never heard of, is now a sovereign scale creditor to the United States government. Circle, the issuer of USDC, went public in June last year, and that was one of the highest profile listings of the year. So think about what's happening. These issuers are doing something that looks an awful lot like banking. They take in dollars, they invest those dollars in safe assets, they earn the spread, but they sit completely outside the regulated banking perimeter. Now, no deposit insurance, no reserve requirements set by a central bank, no lending mandate. They get the profitable part of banking without the obligations. And that brings us to where I started, the bank's answer. Their counterattack is something I called a tokenized deposit. Now, the distinction matters, so stay with me here. A stablecoin is a claim on a private company's reserves. A tokenized deposit is your actual bank deposit put on a blockchain. So it can move instantly and around the clock, but it stays inside the regulated banking system as a direct claim on your bank. Now, JP Morgan already runs this. Its deposit token launched on a public blockchain in late 2025 and is expanding across networks. Citi has built Citi token services. BNY launched its own version in January. And now, as of just last month, the four biggest US banks are joining forces on a shared network. One participant reportedly called it the bridge. Now, the strategy is simple. Rather than just fight stablecoins, build the alternative. That is the contest. Private digital dollars on one side, and then you have the banking system putting its own money on chain on the other. Now, none of this happens in a vacuum. The rules being written right now will decide who wins, and every major jurisdiction is moving at once. In the United States, the Genius Act became law in July last year. It requires full reserves in safe, liquid assets. It bans the payment of yield, and it brings issuers under federal supervision. The full framework comes into force by Jan 2027, and the Treasury, the OCC, and the FDIC are writing detailed rules as we speak. Now, interestingly, the banks have been lobbying to slow that rulemaking down. Now, here in the UK, and this is directly relevant to this room because the picture is moving fast. The Bank of England is publishing its revised draft rules uh, just this very month. The full financial conduct authority regime goes live in October 2027, with applications opening just next month now. Now, the FCA has already run a sandbox, with firms like Revolut, and in a significant shift, the Bank of England has just dropped its proposed £20,000 limit on how much an individual could hold in a sterling stablecoin, moving instead to cap on the issuers. So, Deputy Governor confirmed that at City Week here in London just a few days ago. Now, the UK is deliberately building a market for the digital pound while trying to keep it stable. Now, whether the rules end up commercially workable is still an open argument among the lawyers. In Europe, the approach is tighter. MiCA places hard caps on non-euro stablecoins, which pushed several exchanges to delist USDT, and the European Central Bank is steering everyone, towards a digital euro. In Japan, the three largest banks have been cleared to launch a joint yen stablecoin together. The thorough line across all of this is that 2 years ago the conversation was whether uh, to regulate stablecoins or not, but today the conversation is when and how fast. The technology has already won the argument about whether or not it is real. Now let me bring this together, and how what do we look forward to? The likely outcome is not one side wiping out the other. It is coexistence with a split. Now, stablecoins look set to dominate cross border payments, remittances, and decentralized finance, the places where speed and global reach matter the most. Tokenized deposits look set to win the institutional and the wholesale world, where staying inside the regulated system is the priority. And the growth runway is enormous. Standard Chartered projects that stablecoins used purely for savings in emerging markets could grow from around $170 billion today to over $1.2 trillion by the end of 2028. Now, broader forecasts from the likes of Citi put the total market on a path towards $1 to $2 trillion in the same window. But I would be doing you a disservice if I only gave you the upside. There are real risks here, and the world's financial watchdogs are flagging them. The Bank for International Settlements has warned that heavy stablecoin use can accelerate capital flight from emerging economies and weaken local currencies. Now, if citizens in a fragile economy abandon their own money, for digital dollars, that country's central bank loses control over its own monetary policy. Now, this is not a small concern. This is a question of national sovereignty, and there is concentration risk. Remember, two issuers control 85% of the market. Now, if confidence in one of them ever broke, the money would move in seconds, and the damage would ripple across the entire system. We've seen how fast digital bank runs can happen. So this is not a clean, triumphant story. Now it is a powerful new technology arriving faster than the guardrails around it. The tension is the defining feature of this moment. Now, at the end, let me leave you with this. We've spent years asking whether stablecoins would ever be more than a crypto toy. The question now is closed. They move trillions. They hold more US debt than most countries. They have forced the world's largest banks to band together and build their own blockchain in self defense. The real question now is not whether stablecoins challenge traditional banking. They plainly do. The real question is whether the banks adopt fast enough to compete, and
Sorry,
whether the rules.
Murtaza, is that correct that we are not changing the slides, or which page is that right now?
Sorry.
Is that correct that we are not changing the slides?
Yes.
Oh, okay,
Are
so
you on
it's
the
good.
last slide
Yeah.
now?
Hmm?
I'm hoping you're on the last slide now.
So you didn't ask me to change the slides, so we are still on the first page.
Oh, I see. You can probably just switch on to the second slide. I still have uh, a lot more to say. So by the time the audience sees this, and I've already explained this in my talk. So by the time the audience sees this, we're gonna be uh, so they'll know what we've spoken about.
So which page should I turn on right now?
The second last page.
So the last page,
The second last page. Yes.
the second last. What
Yes.
does it mean? The second last page, the last page or the second page?
This the page before the last page.
Okay, this one.
Yes. Yes.
Okay.
Right. Yeah. So, we've spent years asking whether I just want to repeat myself so that I can explain to the audience what I was saying. Uh, you know, we've spent years, asking whether stablecoins was just a crypto toy, but it's not. Yeah, right? Because we've just discussed how stablecoins move trillions. They hold more US debt than most countries. They force the world's largest banks to band together and build their own blockchain self defense. The real question now, ladies and gentlemen, is not whether stablecoins challenge traditional banking. They plainly do. We know that. But the real question is whether the banks adapt fast enough to compete, and whether or not the rules are being written this year can capture the benefits without inheriting the risks. The plumbing of money, ladies and gentlemen, is being rebuilt in real time. And for the first time in a very long time, the banks are not the ones holding the wrench. Thank you very much.
Okay, and yeah, I think we'll be covering all the questions in text and responding to the live chats right after the event ends. I will be collecting all the questions and sending them to Murtuza.
Sounds
And yeah, thank you, Murtuza, for such a great presentation. I think once we get the questions and provide responses, probably we can have a series of this kind of events if there
we
will be a
could
lot
we
of
could
questions.
I
Yeah,
suggest
since
I suggest no, since this is a topic like which could probably be not be covered in one session, what we can do is we can collate all the questions that we get today and answer them in a
yes,
separate session for about
answer
15
them
20
live.
minutes.
Yeah.
So I think it's worth doing that because it's a massive topic that needs
Mhm.
a lot more education on.
Yeah, so everyone interested in conversations about stable coins, please leave your questions in the live chats, and probably we will be doing the next Q&A type of session live. Yeah, we'll try to organize that. And this will be it for today. Thank you again, Murtuza, and thank you everyone who joined live. Thank you everyone who is watching this as a recording, and see you soon.
Thank you, everybody. Thank
Yeah,
you, Alex.
thanks. Bye-bye, everyone.